Hello traders, this is Rich from Tradesight. This is the market preview for the upcoming session. This is going to be for Thursday, December 5th, 2013. We had kind of a bifurcated day where we had a little bit of a relative strength in the NASDAQ side, but the broad market side was fairly weak. Lost a little bit of ground on the Dow. The ES futures were about flat, but the NASDAQ futures advanced a little bit, up about 7 handles on the day. But while the NASDAQ was trying to advance, the advanced declines on both sides were negative. We're minus about 750 issues on New York, and minus about 400 on NASDAQ, which is definitely not a strong showing, and actually a kind of a camouflage signal of distribution by the NASDAQ. Here's a look at the ES futures. While the ES was just barely positive on the day, one of the other key takeaways was that it did close decently above the day's open, so we have a fairly positive real body candle on the chart. We did take out the previous day's low, so we are qualified now as short-term negative. But if we do start to reach up higher, we're going to start talking about printing that 13 exhaustion. So even if we do move higher, the bulls shouldn't get too excited about the prospects of a breakout that's going to follow through and really expand the range to the upside. It's probably very unlikely at this point. So as far as levels, obviously the high watermark of the move is the 6/8 level at 1812.50. That's going to be important. To the downside, the gap window here is going to be, or this low from last week is going to be important, about 1775. If that gives way, then the next level that's going to come into play is going to be that 1750 area. That's our 4/8 level on the daily chart here. Moving on to the NASDAQ side, this is where we had our little bit of relative strength on the day. The chart today did use the 10 EMA for support intraday, touched that and bounced back up, and in so doing has really kind of just deferred that exhaustion warning from turning into an outright exhaustion sell signal. So for now, we're still waiting for that to work its way through. The other thing to keep in mind here is that we're 8 days up in this new momentum phase to the upside, and if we print 9 days up, that's going to be an extra little push that the market's going to have, and some extra resistance on top of it. If we do proceed to the upside, though, the high water mark of the move is going to be resistance. We almost got there today, came up just a little bit short. So right around 3,500 is going to be your resistance, and then above that, the risk level from the seeker exhaustion count is going to come into play. That's going to be pretty important at 3523. To the downside, if we do roll the 10 EMA, which is also yesterday's low, is going to be important, and then the 8/8 level at 3437 will come into play. Okay, taking a look at some of the market internals, or the intramarkets, if you will. The Dow Gold ratio took a pretty good hit today. We did see the Dow was down a little bit, but gold was fairly strong today. So we're starting to see what could be the beginning of a change in trend here. Let's keep in mind that one day does not make a trend, but this is definitely something that the astute traders are going to be monitoring to see if we do get a little bit more of a changing character in the market. So let's keep our eyes on the Dow Gold ratio. And now let's take a look at the S&P TLT. The S&P was about flat on the day, but the TLT was pretty weak. So what that did was we kind of pushed up here a little bit and got a little bit closer towards that previous high, but we haven't started to break that out yet. So right in the area, in the region of the previous high here in the S&P TLT cross. So for now, they're still essentially putting on risk via equities over fixed income. The relative strength in the NDX today did move the ratio up a little bit here in the NDX versus the S&P. Getting a little bit closer towards that key resistance area. So if we do get up into that area, that's going to be notable. We'll have to see how it interacts. At first touch, is probably going to be pretty good resistance. So be prepared for the NASDAQ to start to run out of steam when that level does get touched, and it's very, very close. All right, so here's a look at our multi-sector daily chart. Not a lot of movement in most of the majors. The semiconductors were a little bit weak, a little bit of a bounce in the banking index. The BTK remains a little bit sloppy. Definitely the best performer on this was the bounce that we saw in the XAU. The XAU is essentially trying to make a double bottom of sorts in here. It's still in the neighborhood of the previous low here, so we'll have to see if this is going to be a bounce or whether this is going to be a more material turn in this key sector. Here's a look at the individual sectors ranked from best to worst. Certainly the big standout was the XAU. Perhaps it's just an oversold bounce, but we'll have to see if this has any legs to it. We'll probably know a little bit better early next week. The hardware index was also fairly strong. That was definitely one of the better NASDAQ sectors. The commodity-related equity index was pretty strong. The semiconductors were fairly low down the list, as you can see, down about 0.5%, which is not particularly encouraging. What you want to see then is that the semiconductors and the BTKs are weak. BTK was fairly weak on the day. You want to see the transports and the oil services really start to kick in. Transports were kind of mid-range here, really didn't show any real relative strength. And the oil services kind of held their own in the face of what was kind of a sloppy overall broad market. So not a lot to be learned from the internals today as far as individual sectors, but we did see a pretty good bounce out of the XAU, which could actually be the first little footprints of some risk-off type activity, but one day does not make a trend. All right, so here's a look at the XAU. The XAU made a little bounce today, but it's neither pivoting off any key numbers from the seeker, nor is it pivoting off of any key level here in the marine math box. The only thing that it's really doing is essentially retesting this area here and potentially double bottoming off this low that was made in late June. So jury's still out. We'll have to see how this plays out. All right, we don't spend a lot of time talking about the hardware index, but I just want to point out the bar count here. We have had a very extended run to the upside here. It was pretty good push to the upside here. Here's our 9-bar run in the momentum phase, and then we went into the exhaustion phase and got our 13 locked in. We have our 13 locked in. We went up to tickle the risk level, but it hasn't been taken out yet. So this is definitely something that could start to falter. Had some decent price action today out of Hewlett Packard, but if Apple starts to roll like I think it will, and that'll probably start to unnerve this sector a little bit and start to spill over to the downside. Airlines were the last laggard, but they did leave a pretty good tail. We do have this 13 in place, as you can see. We did break down below the 10 EMA, so this is now an active sell signal. So we're getting a little bit of a bounce here. We didn't close up on the day, but we left a pretty good sized tail here. So if we get back up into this 10 EMA, probably going to find resistance again as people are going to start to try and get out even, and escape this initial roll down to the downside. Semiconductors, still using the risk level as resistance. Haven't really been able to do too much with that yet. Keep in mind that this seeker exhaustion run to the upside is pretty tight and didn't cover a lot of range to the upside, so there wasn't a lot of expansion. So these are the ones that are prone to failing a little bit more, and if it does fail, then the risk level is going to be the indication and certainly the important breakout level. Transports on the day didn't do too much aside from trading more or less in line with the broad market. They did use this previous low for support and bounce back up, but we are still below 10 EMA, and we're short-term negative now. Key resistance is going to be the static trend line, which is approximately the swing high move on this push to the upside so far. All right, so here's a look at the oil futures. Oil futures have pivoted off of this 13 exhaustion to the upside. We've broken above the 10 EMA and pushed through and made good on that breakout. So we are short-term positive. Right now we're running into this little convergence area where the 50 and the 200 DMAs come together. So we're going to have some resistance here. May need to do a little work in here, if you will, and then probably pivot out and break above that. Once that happens, the next level is going to be the 4-ace level at 100, and then release above that. We'll put the static trend line in play at about 104. Next up, let's take a look at the gold futures. Gold futures on the day were pretty strong. Kind of looks about like the XAU. Potential double bottom here. This one is a little bit better set up on the GAN box because we're into the oversold area and pivoting around the 0-ace level. So this actually has a little better support. You can see back here in June we used the -2-ace level, which is critical support, and pivoted up. It made a pretty good run to the upside only to fall back and retest that general area again. So box hasn't frame shifted yet, but we're using some key levels here. If we do break back above this 1250 area, this is going to be key resistance. If we break back above that area, then we're probably going to wind up putting the 50 DMA into play. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.